What's going on, everybody? I hope you have a great morning, afternoon, or evening, depending on wherever you tune in the world. I'm EQ and welcome to my channel, EQ Trades. And today I'm going to be charting Bitcoin with you. I'm going to be going over what I look for in the weekly chart as far as major supports and resistance or trends, so you can get an idea of how I trade and what I look for when I'm looking at the charts. But before we get into all that, if you haven't subscribed already, make sure to hit that subscribe button. And if you want to come trade with me, make sure to check out the EPIQ Trading Floor. I'll make sure to leave a link in the description of this video. But without further ado, let's get into it. So the first thing that I notice when I get to the Bitcoin weekly chart, I can see that we are in a bearish crossover. Now, a bearish crossover just means that this colorful line is going under the gray line. This is the crossover strategy. This is a big strategy in our Discord group and in the EPIQ Trading Floor. You can see how it's worked previously. We've had a bearish crossover to a sell-off. We've had a bullish crossover, which ended up becoming a nice big play. So when you see these big trend flips, it's something important to note. And one of the first things I'm going to do is put the range of consolidation that we're currently in. Price has basically been floating in between the $60,000 to $72,000 range the last couple months, or I should say few months. And typically when that happens, this is a sign of distribution. When you have a consolidation at the top of a peak, I like to consider this a distribution instead of an accumulation. So to keep into this logic of being a distribution, this isn't saying that price is immediately going to drop out. Now we could continue to go within this range and continue to go sideways for quite some time. It really is up to what the market wants to dictate. But I do see this long-term trend turning bearish. And when I see that happening, the first thing I want to do is see if we did want to drop, where we would drop. Now, to figure that out, I'll use a Fibonacci retracement. And I do like this area right here because we had a support hold and a support hold, so technically a double bottom, and had a really strong push to test all-time highs. Now, when I put this Fibonacci retracement, let me slide this over a little bit so it's easier to read for everyone. I'm going to have some key levels that I'm looking for potential bounces to maintain the harmonic relation of a Fibonacci move, because if it did maintain the relation and maintain its Fibonacci, we could theoretically see price get all the way up to 117,000, which is right in the ballpark of where people are guesstimating price to go on the low end going into this next bull cycle. But in order for price to get up there, we do need a healthy retracement, and the most common way to get to a take profit 3 in terms of harmonics is to get to the 7860. So ideally, we want to see price get down to about the 42 to 35K range for a healthy retracement, just so we can see a stronger impulse move going into the next bull cycle. And now that we have these levels that we're keeping out for, I'm going to look for some of this historical data from the previous zones. So I'm going to find major supports and resistances. So I can see major resistance right here. I can see that we had a little bit of resistance here. This area is crucial because this resistance led to a major sell-off. And at the same time, if you slide over, this is in a support zone that pushed up to create an all-time high at that time. And if you continue to slide down, we can see that there is an upper wick that did test here that came down before coming back up to create the first all-time high. And I'm also going to add a zone down here as well, because this was where price was able to hold and take a nice push to all-time high. And I'm actually going to slide this down because same that I was just talking about. Price held, all-time high, price held, new all-time high. We're going to slide this down, and you'll see that ironically enough, that zone is just under the 7860. So for a major pullback, we could see it theoretically get down to 31, but keep in mind that these are all ranges. So you would ideally be looking for something like this, which would make contact with these other lower wicks here. So essentially something within the range of 33,000 to 29,000 at a really, really low would make sense based on what we've seen historically. The other price that I do like and that I'm looking for would be at this zone right at about 42,000, where we've seen some nice holds for a few weeks previously and made a continuation pattern so that price could get to the new all-time highs that we've created in 2024. And the 6180 in general is a great place for the Fibonacci to bounce. We could essentially see lower wicks going into what I refer to as EQ's golden pocket, which is in between the 61 and 78 fibs. Now the reason why it's called EQ golden pocket is because the standard fib golden pocket is between the 50 and 6180, but because of the volatility in the crypto market, it's really common to see price get in between the 61 to 78 range. So this is why I like to refer to this as the golden pocket ratio, or EQ's golden pocket, when we're trading crypto specifically. It's important to keep in mind when you look on the left side, this is all volume. This is going to be the VRVP, the visible range volume profile. And this is telling me right now that based on from 2020 all the way through the 2021 bull run into the bear run of 2022 and 2023 into this last impulse move, the most amount of volume came into the market in this zone right here. This is literally where the most amount of money has ever flowed in through the last bull cycle and into what we've seen so far. So this zone is going to act like a giant magnet. And this theoretically can pull price down because even through this whole impulse run that everyone is saying that, we could continuously see this go up to 100,000, we really have not seen that much volume come in. All the big players that got in early, and then we saw this pop. Now, we're going to add another confluence on top because everything we're doing here is all confluences. So we're just going to ride this trend line as well. This is going to be the trend that price is currently on in terms of the weekly chart. And you can see we're just starting to test this area on the weekly right now. We've had a lower wick come through, and we're just starting to test again. So this is going to be important to note because if we do break through this trend, this could be the first slippage in the first place that we could potentially see some slippage back down into the 50s, 40s, and theoretically potentially into the 30K range. So yeah, I guess it's safe to say that I'm looking relatively bearish at the scenario right now. And keep in mind, this is a weekly chart, so we could see another push back up. We could see another test back into the 70, 71,000 range. I'm not saying that this could drop. We could pop from here and continue to ride up. And even then, even if we were to break this long-term trend, we would still want it to come up and ideally test it as a resistance because it would be a support. If this holds right now, a support, but if it breaks, we want to see it turn into a resistance at some point, confirm a resistance on a long term, and then start to see this trend push down. Now, hopefully you found something in this video useful. Make sure to hit that like button if you did. And again, if you want to come trade with me, make sure to check out the EPIQ Trading Floor. We have limited seats available, and it gives you access to our Discord, our Academy, buy and sell signals, a whole lot of stuff. So definitely check it out. The link is going to be in our description. And I hope you have a great day depending on wherever you tune in the world.